What is up, guys? Mike Wing here, back with another video updating the cryptocurrency market. Now, I haven't been updating YouTube videos on crypto for a while, and I apologize for that. I have been working on the newsletter for my subscribers, and I wasn't able to find the time to make YouTube videos, especially with the market being so volatile. I have tried to update my Twitter followers as much as I could, but I felt like I might have been giving mixed signals, and that might have been confusing for some of my followers. So, without further ado, let's dive right into what we can see from the charts today. So, in my newsletter, I explained the probable bullish and bearish cases, and with the recent dump down to 42K levels, I think my short-term bear, long-term bull thesis is the most probable case for now. So what I want to do is first explain the bull thesis that I had for the short term that obviously got invalidated, but this was what I was looking at. I was looking at an ending diagonal pattern leading to a potential breakout, and breakout as in breaking out of this descending resistance and retesting it in the form of a pullback before we could form a higher high. And another perspective was looking at this entire thing as a bear trap. So what we are seeing here was a formation of higher lows and higher highs, and we break down the ascending trend line support only to move back up once again to form new higher highs and higher lows. But obviously that isn't the case, and that's more prevalent in the 4-hour chart as well, and I'll be going over the 4-hour chart later, but for now I want to stick with the daily chart. So basically the bullish perspective, so to speak, that I had was looking at this entire range as an ending diagonal. Now, what we are seeing right now, however, is a huge bearish engulfing candle breaking down below the 0.618 Fibonacci support at 44.4K. So this range over here, right? I actually marked the significant support and resistance zones, resistance in red and support in green. Obviously, this is now resistance, support turned resistance, but before yesterday, actually, I was about to make a video as Bitcoin was trading at this range, saying that Bitcoin needs to break out of this range and retest this descending resistance as support before we can confirm that it's short-term bullish, or else we would see the price drop below this this support range, and we could potentially see the formation of lower lows, because while alts looked good, Bitcoin was technically forming lower highs on the shorter time frames as well. So essentially what we are seeing over here is the formation of a lower low compared to this one here, right? Lower high here. And that's what we're seeing. We're seeing a short-term downtrend that's pretty obvious. A lot of people were saying that we were going to fill the wick down to 42K, and it seems like we're doing exactly that right now. We haven't completely filled it yet, but I think it's only a matter of time. Now, there is a fractal perspective that I uploaded on the 21st of December last year, and this is exactly it, right? So we have actually... So this is Bitcoin's chart, right? You guys can't see the part that's cut out over here this way, but we have Bitcoin's chart over here, and this is Bitcoin's chart on the 4-hour, and we can see that the pattern is roughly the same. So it had a sharp drop with a candle wick forming hugely downwards, and we have a descending wedge that managed to break out, but we had a lack of momentum, which led it to break down, not only to retest the region where it wicked down to, but even further below, because that's how it psychologically works, right? A lot of people are expecting us to fill the wick at 42K, but I feel like if we were to go down to those levels, and which we are at right now, by the way, we would go even lower to further test support levels that hasn't been tapped yet in order to form a fake out and shake out all the weak hands before we can move back up again. And I think this is the fractal that we should be referring to right now, obviously until it gets negated, right? So just taking a look at the 4-hour chart that I want to share with you guys, I think this provides a better perspective of what I'm looking at. Oops. So again, by the point I uploaded the Fractal Perspective in December, right over here, we hadn't seen that breakout yet, and obviously we broke out. We, again, didn't have enough momentum to continue moving upwards like we did in September over here, right? So a breakout, lack of momentum, seeing the same thing here, breakout, lack of momentum, and now we're dropping down to retest the levels in this in the region that it wicked, right? Now, again, 42K is the support region that everyone has their eyes on. And I feel like, probabilistically speaking, look, so this is the region that people have their eyes on. And I don't feel like, this is what I feel like is a less probable case, right? So since everyone has their eyes on 42K, there is a low probability that we tap exactly this support region before we can form at least another lower high, because that would be too obvious. That's not how the market works, right? Whenever we see prices tap support, it's always either slightly above or slightly below. And that's something you need to take into considerations, right? So we can either move up right here from this point onwards to, let's say, 45, 46K as a relief rally, forming a forming a lower high, right? But failing to break above the descending resistance, only to fall back below once again. That's a probable case. But if we do move to 45K, what you need to keep in mind is that it's technically still a lower high and that there hasn't been any bullish confirmation at all. So even if it looks like alts are partying, don't buy until there is confirmation that the trend has reversed bullish. That's something you need to keep in mind, right? So going back to the concept of the price not touching the support region exactly where it is, I think it should touch somewhere above or below it before we can see a proper bounce if we don't see one right now. And essentially, if we tap below 42K, below the support line that everyone has their eyes on, the next logical support that people have their eyes on is the 40K region, which is the psychological support. So people are thinking, okay, 40K is the max that Bitcoin can go down to, and it can't go anywhere below that because it has already tested 69K, and for it to go down to the high 30K regions is very improbable, right? Because there's got to be a lot of support at 40K. But again, reverse psychology applied to this. If you were a whale and you knew that people were expecting a bounce at 42K and 40K, and that there were a lot of bids here, what would you do? Would you make sure that it bounces exactly at these support levels, or would you create a fake out, making it seem like it's the end of everything before you could form at least another lower high, right? The latter would be the more obvious case. And that is exactly why I have been saying 37.8K as the bottom for the current downtrend. Now, I've actually been saying this for a while. As you can see, this is the post I made on the 5th of December claiming why, according to the technical symmetry analysis, which is a concept that I devised, why I think that 37.8K is the more probable case for now, right? And how I've also provided additional explanation as to why this doesn't necessarily mean that the bull rally is over, because from an Elliott wave perspective, this would mean that we have formed a running flat for our fourth wave. And while our fifth wave wouldn't be this steep, I don't expect it to be this steep, especially with a lack of fundamental drive right now in the market. But even if we do drop to the high 30K region, that would still be a running flat pattern, and that would be a very normal corrective pattern for a wave 4 on the macro scale. And we would still see another final leg up for this market cycle. So for me, from a market psychology perspective and from the perspective of the technical symmetry analysis as well, I feel like 37.8K makes perfect sense for me as a place for a bounce, especially because it also aligns with the 0.786 Fibonacci support. Another thing I want to look at also is the Tether dominance chart. right? That's USDT.D for the ticker if you guys want to check that out on TradingView. And this is the daily chart for the Tether dominance. And what we have here in the orange line is Bitcoin's price, right? And as you guys can obviously see, the price of Bitcoin and Tether's dominance are inversely correlated. And that's obviously because whales, individuals, people, exchanges buy Bitcoin with Tether. So if there's more Tether in the market, that means they're not buying enough Bitcoin, or they're selling their Bitcoin, which causes Bitcoin to go down, and vice versa, right? So there's an inverse correlation here. And I had this line marked up to say that if we see Tether dominance break out of this region, that will probably mean that we would see further downside for Bitcoin. And obviously, I should have posted the video yesterday, but we saw a drop before I could even post it. So this is what I'm looking at. I'm referring to this level over here. And what I would expect for Tether dominance right now is, I'm not sure if it's going to rise dramatically to the 5% range, but I wouldn't be surprised even if it did, especially considering how Bitcoin could drop down to high 30K regions for now, temporarily. Eventually, we would see Tether dominance drop and Bitcoin rise again if we were to see a rally. But this is what I have my eyes on right now for Tether dominance. And so another thing I want to mention for Bitcoin's daily chart is basically you see this descending trend line here. Now, I've seen a lot of people sort of connect the wicks over here, right, the tails over here, and say, oh, look, referring to this black line over here, right? I've seen a lot of people say, oh, look, but it actually, if you take a look at what happened here, it actually broke out of this descending trend line and just retesting this trend line as the form of support, right? As a form of a pullback. But obviously that isn't really the case. And even if that were, that would be a little more depressing, because it would mean that even after breaking out of the significant resistance zone, Bitcoin lacks momentum and drive to push prices forward, right? It's obviously forming lower highs and lower lows. But if we take a look at the line connecting the body of the candles, right? You see this candle over here. The reason connecting the bodies is important is because I feel like it provides a better perspective of where the real resistance lies, right? So as you can see, the price failed to break above this trend line, and that's what caused this massive bearish engulfing candle to form. So I feel like for us to actually see a bullish trend reversal, whether it be at current levels, right? It could be at current levels. I'm just saying that it's not probable, given that how we are already testing the 42K region. There is, I feel like, a higher probability that we tap the late 30K levels, as opposed to us just seeing a breakout from current ranges, right? But eventually what we need to see, the confirmation that I need to look for a bullish trend reversal in the short term, is basically a break above, breaking close above this trend line over here. If we see some sort of a pullback, that will be a great buy opportunity before we can consider how Bitcoin reacts at these significant resistance lines. So the conclusion of this video, what I'm trying to say through this is that I figured some of you guys were confused with my recent tweets, but I just wanted to clarify that I am not saying that it's 100% bullish or 100% bearish. I never approach the market that way. I'm pretty sure that if you approach the market that way, you're going to lose a shit ton of money. No serious trader looks at the market that way, right? I look at support and resistance, invalidation and confirmation levels, right? Like this chart looks simple as hell, and look at how many lines there are, right? All I got here are the significant support levels marked in green, the red lines representing the resistance, right? We have this dotted line demonstrating the uptrend that we were at and how we failed to break above that line once again, right? And there's a descending resistance to represent the current downtrend that we are at, and that's it, you know. And based on this, I have invalidation and confirmation levels. What before the drop yesterday, what I was gonna say in my YouTube video that I failed to upload was that essentially, as Bitcoin ranges between the 53K resistance and 42K support, this could be a no trade zone for you, especially if you're a beginner. the stress that comes from the volatility of the market might not be worth it for you. So what I was going to say is wait until there is clear confirmation either to the upside or downside before you can actually decide and position yourself in the market. So all I'm doing is coming up with a bunch of probable bullish and bearish cases, and I'm coming up with reasons as to why they would be valid or negated. I can't predict the future as much as anyone. So that's the approach I'm taking. Now, the fundamentals of the market isn't bullish for now because there is no new capital flowing into the market. And macroeconomic signs are also not good for the market either for now. People are talking about how they're going to increase the rates again, right? And it seems like there are venture capitals that want to take profits on their crypto gains and all that. But overall, moving into 2022, if I had to choose a side, I would say that I'm rather optimistic on crypto. From a market cycle perspective, we could always see new news that could stir up and vitalize the market once again. And the macro uptrend, which I shared in my trading view post over here through Elliott Wave perspectives, is still intact. So unless we dump below 28.5K, which would validate the running flat pattern, and essentially what we will be seeing in that case would be 1, 2, 3, 4, 5, and the end of the market cycle that had already formed at on 69K levels before we even realized that the market cycle was over. But I feel like that is a less probable case compared to what I am seeing. And unless we dump below 28.5K, and until then, I feel like 38K would be a strong region of interest to me. So that is it for today, guys. Make sure to smash the like button for the YouTube algorithm, subscribe for more quality content, and if you guys have any questions, make sure to comment down below. Also, if you haven't yet, make sure to check out my newsletter. Link is in the description to this video below. You will get all the information that you need at only $25 a month. And I think considering the quality of the information and analysis that I share through my newsletter to my followers, I feel like this is a steal. You're essentially getting free alpha. So make sure to check that out, guys. Once again, thank you guys so much for watching, and I'll see you guys in the next video. Take care.